Hey everybody, welcome to Zoos on Commodities, Global Commodity Analytics. I'm Mike Zuzolo, the founder. Been in brokerage and commodities with the Series 7 license ever since 1995. Been working on analysis pretty much since that time period. We're starting this channel because it's going to be an exciting ride this next year, year and a half, maybe even 5. We don't quite know where the end is, but I think one of the things that spurred me into wanting to do this was the idea that we've got a deglobalization mindset building in this world right now. And I'm going to come back at you with a little bit of a different take than deglobalization. I'm going to say to you that instead of deglobalization, we've got a block of countries, couple big blocks of countries with different economic and different ideological mindsets that's working against liberal democracy and Western capitalism. This has happened in the past, and you got to realize this is going to be a journey that we're going to take, and I'm going to throw a lot at you over the next couple years, probably. But the key here, as we start this out, is about 3 years ago. I think it was 2023 was the first time I started to do research on it, and then formally introduced it in 2024. Was the concept of a new East versus new West. A lot of people will say the new East, which would be China, Russia, India, people like that. A lot of people call that the global South. I'm going to talk to you a lot about why I don't see that as the global South. So this is the big broad brush of what we're looking at here today and what we're going to be looking at over the next couple of years. But I want to touch a little bit on something in the real time. And this is one of the things I don't really enjoy a lot about YouTube videos, quite honestly, is I had a guy that was my first boss when I started in his commodity company. I'd do all this analysis, and then he'd say to me, okay, what are the market implications? What do I do with all this great research? Or what do I do with this gobbledygook? And that taught me that writing the research and analysis, it's probably 90% of the effort, but it's really only 50% of what you need to be thinking about. You want to write the analysis in a pure format, or as pure a format as you can, but then you want to get into, what do I do with this for my clients? And this is where it really gets tough, because you've got to give what I would call a market implication. That's what he always said to me. What's the market implication of what you just wrote me? And that was a very valuable piece of analysis. And so what I want to do in this video is I want to talk about history. I want to talk about political science. I want to talk about economics. But I also want to talk about the practicality in real time of what's going on. And that's what's so exciting about this first video, is we just are coming off of a 1-year high in the soft red wheat market, and we're just coming off of a multi-month high in the WTI crude oil market. About 6 months ago, and you can see this to the chart over here on the what would be your right. The key with this WTI SRW wheat correlation study, and we'll talk about correlations and what they mean at another time, but it's essentially how are these prices working with one another. And so what I did is I teamed up WTI crude oil market, so that's the New York crude, against soft red wheat. That's what used to be the Chicago wheat. And remember, if you don't know much about wheat and agriculture commodities and energies, there's all different types of classifications because of the quality. In the case of wheat, it's the quality. Hard red wheat in Kansas is going to be used for certain types of baking. Soft red wheat is going to be used for some other type of food. But not getting down the wormhole too much, but these correlations are important to be able to kind of align key elements and key assets. And so this correlation that you're looking at is a 4-week correlation of lead month futures of SRW wheat and WTI crude. And notice what you have. First of all, the first thing that you should notice is that 4-week correlation is almost 0.90. That's a plus 90% price relationship over the course of 4 running weeks. Now, the next thing you'll notice is you've got a correlation that is very strong in the positive mindset. And when you look at that bottom part of that chart and the orange bars, you notice it's been positive ever since early 2025. Why would that be? Well, this goes back to the New East and the New West. Who are the two top countries in the New East, New West? I put them as Russia and China. And so when you see in 2025, all of a sudden the wheat and the crude oil come together in price action so significantly, why would that be? Well, it's because of Russia. Why would wheat and crude be so close together with one another? Because that's what Russia has funded their war with. The exports of wheat, the exports of crude oil. But why, since early 2025, would that correlation be so positive? Well, it goes back to the Russian ruble and sanctions. Remember, after the invasion of 22, we saw everything go up in the commodity markets. And then everything came back down again. And then we settled into a mindset of, okay, in the wheat at least, how is the Russian ruble doing? And to a lesser degree, the crude oil market, how is the wheat and crude oil market doing in terms of the price in Russia and what they can ship it to other countries versus what we or the West can ship it to? Same thing, even more so in the wheat market. But then as we got into 2025, sanctions started to tighten the ability of Russia to export crude oil, but not so much wheat. Now all of a sudden we're starting to see the Russian ruble go up, these sanctions take hold, and now we've got the US-Iran situation that is just right in front of us as we tape and record this program. And so this correlation, in my mind, is one of the leading indicators of the whole commodity markets. And that's because the wheat and the crude oil, they share one common denominator, and that is an oversupply. The trade, the funds, the investor class, those that come into the commodities that don't necessarily have the physical commodities to hedge or offset, they're investing on the idea that we've got too much crude and we've got too much wheat. And those are the two leaders, what I would call leaders to the downside, in quotes. So if wheat and crude are leaders, yeah, go ahead.
Yeah, I got a question on why do you say these are driving the commodity market, the wheat and the crude? Can you go a little more into why that is? Explain that a little bit more.
Yeah, the big thing for the commodity markets is, and especially since the trade has gotten into algorithmic trading and more computerized trading, in my opinion anyway, is they like to spread trade a lot. And so they're looking for commodities that they can buy against commodities that they can sell. And just to jump tracks here for a second, a great example of that would be all throughout 2025, we saw the market essentially buy cattle and sell corn. And we've got other commodities out there and other assets out there, non-agriculture assets. But I think the heart and soul of why the question you're having is you've got a situation where the trade historically looks at crude oil as one of the major determinants for the whole commodity markets. And so these investor classes, even though they don't use the commodity indexes, which is a basket of commodities, even though they don't use it as much, they still reference those when it comes to how they buy and sell. And then you throw on top of that the spread trade. That's how I would look at it as far as why I see these as leaders. But your question really goes back to the heart and soul of the commodities and the New East, New West. I mean, where is the central focus in this market right now, in the world right now? It's in the Black Sea and Ukraine. And what are the two biggest commodities that we're dealing with? And so I would say, even from a psychological mindset, that crude oil and wheat, once they go higher, the mindset of the whole commodity markets could be, let's take everything up as a whole basket, and a rising tide lifts all boats. We haven't seen that since 2007, 2008. A lot of people refer to that kind of thing as a commodity super cycle. That's for another program, which we will talk about. But the key with the New East, New West, and one of the things that really helped me with the New East, New West, and why I disagree somewhat with the deglobalization mindset, is we're in a really serious time period that is very similar to the 1980s. And I have been doing a lot of webinars and seminars, and I'm calling it Back to the Future, because 1985 is the year that Michael J. Fox came out with with that movie. It was also the year on September 22nd, 1985, that the United States, along with 6 of the other biggest countries, the G7 as it was called back then, came in and said to one of their partners, Japan, look, you are over exporting and you're dumping product onto the market, and we need you to stop with this weak currency. We want your Japanese yen to go sharply higher. We want the US dollar to go sharply lower. We need to rebalance trade in favor of the United States, in favor of American manufacturing, in favor of American industrialization. That's what Ronald Reagan and other presidents, but especially Reagan, that Reagan doctrine, so to speak, that was what that was about economically and financially. And this is a Time magazine from 1985 that really kind of kicked off the trade wars with the major Asian tiger and powerhouse at that time, and that was Japan. Now, at the same time, Reagan had to deal with the political issue and strategic issue of the Soviet Union. The Soviet Union came, we outspent them in defense. Ronald Reagan talked about SDI, the Strategic Defense Initiative, Star Wars. We're talking about a golden dome now over Greenland. It's absolutely amazing when I went back and looked at the mid-1980s, how similar we are in terms of where we were back then. Even in 1986, we sent troops into Latin America because of drug narcotic trafficking. So very similar to what we did in early 2026, late 2025. We also had in 1987 a very strong threat against Iran, of all countries. And so what Ronald Reagan did was he had, in my opinion anyway, and we can kick around this a little bit more in another program, but in my opinion, Reagan, he had Japan on the economy, and he had the Soviet Union on the defense. What President Trump has on both is China. But what Trump has that Reagan did not have to deal with was Japan was part of the rest of the global order. President Xi in China, ever since 2011, 2012, have been running the Belt and Road Initiative. And that Belt and Road Initiative has been pulling in more countries and more countries and more countries, so that the BRICS, which the guy from Goldman Sachs came up with, I think in 2007, and it was an economic financial term, those BRICS countries are now BRICS Plus, and many of them are being drawn into China's sphere. And that's the reason why I like the New East as the way to describe other than deglobalization. But the key now, go ahead. Yes, sir.
So you're seeing the 1980s and Reagan, and you're seeing current times in Trump, and I'm sure you're going to get into it, but what can we see from the one period that's going to help us indicate what's coming up in the next?
Yeah, that is the key. I mean, this goes back to the history and then the practicality and the reality. What can I do with it? One thing that puts both of these time periods together is a weak US dollar. How did Trump decide to do this? Trump came in 2017. This is his first term. 2017, President Trump came in with his national security strategy. In that NSS report, they called China a strategic competitor. They called it a revisionist power, and they said that it had predatory economics as far as how it treated its neighbors in the Southeastern Asian areas like the Yellow Sea and the regional area in general. And so what I would say to you is the weak US dollar with President Trump starting in the first term was, I want to get to tariffs, but I can't get to tariffs. So I'm going to do this trade deal with China and kind of try and box them in a little bit. But they were working, I think, the Trump administration was working very hard on what to do if they won the 24 election. Now, what makes me say that? These three books right here. If you like to read and you're interested in what we're talking about here, you really need to look at these three books. You've got The Drift by Kevin Hassett. He's the current head of the Economic Advisors, the CEA. You've got No Trade is Free by Robert Lighthizer. This book is a must-read for anybody, if you ask me. If you're interested in 1980s through now, as far as what the United States was about and what it is now, I think this guy really gives you a great flavor of what's happening. No Trade is Free. And then Marco Rubio, I just got this at a library sale. Haven't gotten through all of it yet. Decades of Decadence. The subtitle in Rubio's his book, though, is How Our Spoiled Elites Blew America's Inheritance of Liberty, Security, and Prosperity. When I saw that, I thought about his speech just given at the Munich conference just 2 weeks ago. Again, if you haven't looked at that, it's about a 30-minute speech. Look at it, because what you and I are talking about today, it solidifies my viewpoint in my opinion. And Jameson Greer is the guy who replaced Robert Lighthizer in this term. Robert Lighthizer was the U.S. trade representative in Trump's first term. He set the table for Greer. Greer came in and he learned underneath. He was the assistant to Lighthizer in the first term. Yes, sir.
What was it about the Rubio speech that solidified what you're talking about today?
Yeah, there's several things that Rubio said, but he said that liberal democracy was on the chopping block. Period. So this idea of New East, New West, this idea of the BRICS turning into a block of countries that have an opposite economic and geopolitical mindset to what we have in Europe and Japan, South Korea, and the United States, I think you'll see very clearly that is where he was headed. He was essentially saying to Europe, we've got to stop it, and we want you to join us in stopping it. But getting back to the weak U.S. dollar, and we'll wrap it up here for today, because I think we've thrown a lot at you. But the weak U.S. dollar for Trump, how did he decide to go about this? Number one, he went after tariffs. And this was a big question mark as to whether this was going to work. But just look at a dollar chart. It was about a year ago today, I think it was, early February. I guess it was probably, earlier this month, a year ago, that we saw these first big hits with the tariffs come in. What's the dollar done ever since? It's gone sharply lower. And the U.S. dollar against the Chinese currency, I think the Chinese currency in the offshore market is one of the highest since mid to early 2023 right now. So the goods of China, when their currency goes up, they can't export as much and they have more buying power to import more. So that's generally speaking how that works. But here's the kicker for me, and this is what I don't think a lot of people are looking at right now. Number two, weak dollar policy is the Fed. Trump put Stephen Moran in on the governors, and now he's getting ready to see the Fed chairman leave, Powell, and he's wanting to bring in Kevin Warsh. I think a weaker dollar policy has to be associated with lower interest rates. And that's why he was so frustrated with Powell. I think a lot of the public were thinking to themselves, why is he pounding Jay Powell so hard? Why is he always getting on him about the building of the new Fed building? Why is he always saying, you got to cut rates, you got to cut rates? Because he wants a weak U.S. dollar, because he is pulling a lot of pages out of the Reagan playbook of the 1980s. Any other questions before we go?
So just to wrap up, you're proposing that Trump's policy is going to be to continue to weaken the dollar because he's dealing with so many similarities to what Reagan dealt with, and this is the playbook.
Exactly. And what's that mean? We've got the midterm elections coming up in November that could stop him cold. And even before that, we have the U.S.-China summit coming up in April. And then even before that, we swing all the way back around to U.S.-Iran and what's going on in the Middle East. So the takeaways for today, and I'm going to try and do this every time with the help of Tom here. The takeaways for today is we got to watch U.S. Iran here in the short term, because historically speaking, and this is backed up by IMF and Bank of International Settlements research, historically speaking, the crude oil can bring in all commodities. As far as if it rallies, there is a ripple effect that lifts the other commodities typically, especially if we would have a regional war in the Middle East. The second thing I want to take away, and we'll talk about this, is maybe where we'll kick off when we come back next time, is we got globalization wrong because, and I've got some books I'll talk to you about next time, because China and Russia, in Trump's opinion, they do not equal a benign power. And that's the issue that we're going to pick up next time, because that's a really crucial issue as to why we aren't in globalization right now and why we're seeking this weaker dollar policy. Thanks for joining us.